and welcome to this week's edition of Hard Money. I'm Natalie Brunell. Bitcoin's price continues to chop along around the $20,000 mark. If it doesn't close the month of June above the 200-week moving average of $22,000, it will be the first monthly close below that average ever. And that has Bitcoin bears sharpening their claws. According to the Wall Street Journal, short sellers have been ramping up their bets against Bitcoin and Tether, the world's largest stablecoin, amid a broad market sell-off. Tether confirmed that hedge funds are trying to short them, but says they are 100% backed and never failed a redemption. The drop in Bitcoin's price is having a huge impact on miners. According to a report from Bloomberg, almost $4 billion in mining loans are coming under stress. A growing number of loans are now underwater as many of the mining rigs that were used as collateral have halved in value. To be fair, very few miners have actually defaulted on their loans so far, but more and more miners are selling their coins to cover the costs. Recently, Core Scientific had to sell 2,000 Bitcoins to pay for operational costs, and Bitfarms sold half their mine tokens to pay down its loans. Analysts warn if the market doesn't improve, Bitcoin's price and the number of miners could take a severe hit. But staying true to his word, MicroStrategy CEO and Bitcoin Super Bowl Michael Saylor continues to buy more Bitcoin. MicroStrategy just announced buying 480 more Bitcoin for $10 million. That's an average price of $20,817 per coin, and the company now hodls just under 130,000 Bitcoins, spending a little under $4 billion for them. Saylor has constantly said he intends to keep buying as much Bitcoin as possible, and in a few minutes we will speak to Saylor about this bear market and why he keeps stacking. Something all Bitcoiners have been saying for years is there's a big difference between Bitcoin and crypto, a distinction that now even the head of the SEC, Gary Gensler, made when talking about crypto regulation. Speaking Monday on CNBC, Gensler says that Bitcoin is the only cryptocurrency that he is prepared to label publicly as a commodity.
Many of these financial assets, crypto financial assets, have the key attributes of a security. They're under the Securities and Exchange Commission. Some, like Bitcoin, and that's the only one, Jim, I'm going to say, because I'm not going to talk about any one of these tokens, but
sure.
My predecessors and others have said they're a commodity. And many of these tokens right now are trying to operate, they're potentially non-compliant, and I'll leave it at that, Jim.
In that same interview, Gensler said that there is still a lot of work to do on comprehensive regulations in the crypto market. Legendary venture capitalist Tim Draper is standing by his prediction that Bitcoin will reach $250,000 per coin by the end of this year or early 2023. In January, Draper did an interview with Forbes magazine making the prediction, and now that Bitcoin has lost half its price value since then, Forbes reached back out. He responded, quote, "I am more convinced than ever it is happening." Draper famously bought 30,000 Bitcoins at a U.S. Marshals auction in 2014 for $18.7 million at an average price of $623 per Bitcoin. And while Draper may be bullish, the SEC has given some investors a new reason to be bearish. On Wednesday, the SEC rejected Greyscale's application to convert its GBTC product into the first Bitcoin spot ETF. In response, Greyscale CEO Michael Sonnenschein announced yesterday that they have filed a lawsuit against the SEC. Other countries like Canada already have a spot ETF, but the SEC has yet to approve one in the United States. While the United States continues work on the regulatory front, the government of Central African Republic is launching a major crypto hub. The project is known as Sango, and it'll launch on July 3rd and will establish a crypto national bank, create a state-sponsored Lightning wallet, and exempt crypto exchanges from taxes. CAR made headlines earlier this year when it became the second country in the world to make Bitcoin legal tender. CAR also wants to create a Bitcoin island, similar to El Salvador's plans of creating Bitcoin City. As CAR's president, Faustin Archange Touadera, recently said, an entire society grows when its country adopts Bitcoin. Embattled crypto lender Celsius is denying accusations that its CEO tried to flee the country. According to CoinGape, Alex Mashinsky was stopped by authorities at an airport in New Jersey trying to travel to Israel. Claims of possible insolvency have been floating around since Celsius decided to freeze withdrawals, swaps, or transfers among all accounts in June due to a liquidity crisis. Celsius has not released any statement about the report, but according to Twitter user watcher.guru, the company has denied all accusations that Mashinsky was trying to escape. And the news for Celsius itself is no better. According to The Block, FTX had been in talks with Celsius discussing a possible acquisition, but that fell through due to a $2 billion hole in Celsius's balance sheet. The Wall Street Journal reports that the platform was riskier than a traditional bank and had issued large loans backed by little collateral. Speaking of FTX, CNBC reported that the company was closing in on a deal to buy embattled crypto lender BlockFi in a fire sale for just $25 million, which would be a 99% discount from the $4.8 billion Series E valuation in July 2021. But BlockFi CEO Zach Prince tweeted this in response to the headlines. Lots of market rumors out there. I can 100% confirm that we aren't being sold for $25 million. I encourage everyone to trust only details that you hear directly from BlockFi. New this week, Voyager Digital sent a default notice to Three Arrows Capital, the crypto hedge fund whose reputation has taken a nosedive amidst a string of crypto liquidity crises. According to Bloomberg, a loan of 15,250 Bitcoin from Voyager Digital to Three Arrows was worth roughly $670 million based on the price of Bitcoin this past Monday. With Three Arrows failing to make the required payments on the loan, Voyager is reportedly accessing a $75 million line of credit from Alameda in order to keep business running smoothly as they attempt to recover the funds. Voyager CEO Stephen Ehrlich said, quote, "We are working diligently and expeditiously to strengthen our balance sheet and pursuing options so we can continue to meet customer liquidity demands." And finally, Bitcoin Magazine is launching its first European Bitcoin conference, Bitcoin Amsterdam. It'll happen on October 12th through the 14th. And the event will gather Bitcoiners from around Europe and from across the world to discuss Bitcoin and how to increase global adoption. This will be Bitcoin Magazine's first major event outside the US. Those are the latest Bitcoin headlines. Ahead, we speak to Michael Saylor about Bitcoin and the state of the financial markets. Stay tuned. Welcome back. Joining me now is CEO of MicroStrategy and a favorite among Bitcoin bulls, Michael Saylor. Michael, thank you so much for joining me for the first time on Hard Money.
Yeah, thanks for having me, Natalie.
Well, I guess the first place I want to start is we had some very bullish comments by SEC Chairman Gary Gensler this week about how Bitcoin is the only cryptocurrency that he would publicly label as a commodity. So can I get your reaction to that?
Yeah, I think he said this on a number of occasions in the past, but reiterating it on CNBC yesterday, I thought was very, very helpful for the community because we just crossed the threshold of 20,000 crypto tokens. And so there's one that's clearly a commodity, and there's 20,000 tokens, most of which are securities. And the entire future of Bitcoin is, for better or for worse, it's linked with the crypto industry. So the sooner that rationale and order comes to the crypto economy and the crypto industry, then the better it's going to be for Bitcoin, and the sooner that Bitcoin will emerge as a mature institutional treasury reserve asset.
We're hearing more about these exchanges that have liquidity issues. What do you say to the investors out there that purchase their Bitcoin and maybe other digital assets on these platforms and maybe held them trying to earn yield? What should they know?
Well, I think Bitcoiners forever have been saying, not your keys, not your coin. And they say, get your Bitcoin off the exchanges. So, I mean, the essential thing that you want to do after you acquire Bitcoin is to store it in a safe place. Now that safe place isn't always a hardware wallet. It might be an organization like Fidelity that's a custodian that you trust, or some cold storage, or some institutional grade custodian, or a multi-sig arrangement with a company that you vetted, you trust. But leaving Bitcoin on an exchange has always been risky since Mt. Gox. So we all learned that. And I think that borrowing or generating yield from a unregistered or unlicensed bank or an immature bank is a risky thing to do. And so, for example, MicroStrategy, we took a loan from Silvergate, but Silvergate was an FDIC insured bank. And when we did that, the terms of the loan were such that we didn't transfer our Bitcoin to Silvergate Bank. We actually put it in custody, and we maintained custody of it. So we could have borrowed money at 0% interest if we had transferred the Bitcoin to one of these wildcat crypto banks, where they would say they give you a very, very cheap loan at a high loan to value, but the catch is you have to transfer your Bitcoin to them, and then they loan it out to a third party. The challenge with that is that you take the counterparty risk with the bank. If the bank fails, then you lose your Bitcoin. And then you also take the counterparty risk with the counterparties of the bank that you don't know of. And so if they loan it to someone else, to a hedge fund like Three Arrows, and the hedge fund fails, then you also lose your Bitcoin. So you're actually taking two layers of counterparty risk to do business with an immature bank. It always looks good going in. They pay you a higher interest rate, or they give you a cheaper loan. But the counterparty risk, when you calculate it, offsets the benefit. That's why we've never done those things. That's why we never generated yield on Bitcoin. And that's why we didn't choose to take on those kind of loans. So I think this is a painful lesson for the industry, but it's not a surprise. I think for the business to grow up, we need more mature, better capitalized institutions, publicly traded companies, public banks, FDIC insured banks, right? Licensed, registered entities. And of course, when you're doing business, what you want to do is always be careful when it looks too good to be true, right? Because when it looks too good to be true, generally it is.
What do you think is Bitcoin's biggest vulnerability right now?
I think that right now, the biggest vulnerability to Bitcoin is the rest of the crypto industry. I think the 20,000 tokens that are unregistered securities, I think the crypto exchanges, the wildcat crypto banks, all the crypto projects, all of the people trading those cryptos, all the crypto hedge funds, and then all of the negative publicity, and then the negative financial outcomes that come about from things like Terra, Luna, right? The meltdown of a stable coin that was not stable, that was traded as a commodity that was really a security, that because they never declared it a security, they never actually made any fair disclosures on it. So you had an under collateralized asset, $50 billion worth of something, trading with $1 billion or $2 billion of equity, right? 50x levered without disclosure, with a lot of DeFi exchanges and other crypto exchanges allowing those tokens to trade and marketing them with leverage. And I think that got cross-collateralized into Bitcoin. And so the volatility of Bitcoin on the upside and the downside, and then the negative publicity and the the fear that a conventional investor, an institutional investor would have to buy Bitcoin is in large part due to the Wild West and the wildcatters and the crypto ecosystem. And the sooner that we clear out that leverage, and the sooner that the world starts to distinguish between crypto tokens that are securities and then Bitcoin, which is a commodity, then the sooner the industry grows up and the asset class grows up.
That's right. Do you have any concerns about solvency with Bitcoin miners? I know that a lot of them have financed their operations through debt. Do you worry that any are over leveraged?
Well, the elegance of the Bitcoin protocol is that Bitcoin mining is an open, permissionless industry that anybody can join. And every 2 weeks, the difficulty of mining increases or decreases based upon the market dynamic. So I think of Bitcoin miners as the line of first defense for Bitcoin. When things go badly, either when poor decisions are made or when acts of God take place or acts of government or nation states, the miners suffer so that the Bitcoin holders don't. So do I worry about miners? Sure. If you're a miner in Iran running on free energy, when the government cracks down on the free energy supplement, you'll suffer. If you're a miner in China running on free or cheap electricity, when the government starts to notice that, you'll suffer. So miners will suffer. When electricity costs go up, the miners will suffer. When the Bitcoin price goes up, they'll benefit. Over time, mining is going to get more difficult. It's going to get 18% more difficult every year because of the halvings. Mm-hmm. And it's going to get 50% more difficult every year because, or 75% more, or some percent more because hash rate keeps coming online. And if you're entering the mining business, you're entering into a very, very competitive industry. So that's why I think it's better if you have money to invest, it's better to invest the money in Bitcoin, not in a Bitcoin mining rig. I think Bitcoin mining is a business and there are counterparty risk. We've seen, for example, if you had mining rigs in Russia, when the Russian sanctions took place, you lost your mining rigs. Okay, so if you're in business, you can have your business interest damaged by war, famine, tariff, tax, competition, entropy, poor execution. And that's why mining Bitcoin is not the same as holding Bitcoin. It's a very competitive, challenging thing. But if miners on the periphery go out of business, when half the hash rate got wiped out in China, it didn't damage Bitcoin. It simply shifted the profitability to North America. And if Bitcoin prices get cut in half, and if electricity rates double, it won't wipe out Bitcoin mining. It will simply squeeze out people running mining rigs that are previous to S9. The third generation antiquated mining rigs will find their break-even point reaches 1 or 2 cents, a kilowatt hour. And if they can't buy electricity cheaper than a penny a kilowatt hour, they're not going to be profitable. So they'll shut down their hash rate. But when they shut down the hash rate, the difficulty will adjust down in order to balance the network. And the network is probably 1,000 times higher hash rate than it needs to be secure. So I don't really worry one way or the other about Bitcoin. And as for Bitcoin miners, yeah, if I would worry about every one of them. And the reason I don't run a Bitcoin mining company is because it would take all my time and all my attention, and I would be worrying about all of these things. But you know what? That's why we want Bitcoin mining, because there are 100 pretty large Bitcoin mining companies with CEOs and executive teams. And every one of those teams is worried about Bitcoin in Kazakhstan or in Russia or in China or in Canada or in Africa or in Texas or in California or in New York. They're all worrying, and they're worrying so that we don't have to. And ultimately, it's, it is like the skin in your immune system. It's there to catch the infection and protect you. And if you lost your skin, then you would probably not live very long. But occasionally, you're going to suffer a bit, and that's just part of a healthy ecosystem.
Well, Michael, you always share the message of don't look at Bitcoin with a short time horizon. But for those out there that are really concerned about this price drop, how much lower do you think it's going to go before we hit a bottom? Or do you think we're near a bottom right now?
It's hard to know where Bitcoin's going to go. It's always surprising you one way or the other. So I mean, I don't pick any particular price target on the downside or the upside because I don't want to disappoint myself or anybody else. I do focus upon the 4-year moving average, and I think the 4-year moving average reflects kind of the basis that most Bitcoin holders have in their Bitcoin. So I tend to think that as it gets close to the 4-year moving average, it gets a pretty strong base of support. But in the near term, given the fact that there's just so much leverage in the rest of the crypto ecosystem, and there are large hedge funds and large traders that have a much shorter term time horizon, they're going to control the price in the near term. I think all you can do is just look out 4 years or longer and maintain your strategy. And in the difficult times, just avoid getting liquidated, right? Make sure that you're not in a leverage situation where you get forced liquidated during the difficult times. And then in the good times, hodl, because you'll generally, everybody is not very good at predicting the future. And so if you're trying to predict the future, as a mere mortal, the marketplace will probably make a fool of you.
Well, we got a really interesting viewer question submission. Do you think that Bitcoin is America's last chance to remain a global superpower?
I think Bitcoin is the most important technology of the decade, maybe the most important technology of the century. And I think that the key to being a superpower is being a technology leader. The reason that the United States was a superpower in the 20th century was because they mastered oil and steel and air power and atomic power and other forms of technology, radio, electricity. And I think that in the 21st century, if you want to remain a superpower, you have to master digital energy. And I do think right now the United States has a lead in the Bitcoin industry because of so many developments, so many innovations that have taken place here in this country. So I would say it is critical to the prosperity of the country, and it's probably critical to the prosperity of any country in the world as time goes by.
If Bitcoin didn't exist, what would your company's strategy toward handling the economy be right now?
If there were no Bitcoin, I suppose, we would be levered up with a lot more debt. When you don't have Bitcoin and you look at the inflation rate, your conclusion is, I need to be a net debtor. So I guess you could look at all the other companies in the world that don't have Bitcoin and ask, how do they get by? Like all the Japanese conglomerates, what they do is they take on large sums of debt and they either go private with huge amounts of debt, like an LBO, or they stay public, but they lever on huge amounts of debt because that way they're not carrying cash that's losing purchasing power on the balance sheet, and they lever up their equity. So I suppose we would be a very levered LBO type candidate running with a very thin layer of equity and negative working capital, and hoping, right? It'd be very stressful because you would be hoping that you never have a bad quarter, because when you're highly levered up, when you're running with $2 billion of debt and no equity, then when you get a bad quarter, you default on your debt, and then you end up with like Toys R Us situation, or all the companies went bankrupt in the past 20 years. They just have a bad year. They can't make their debt payments. The equity holders get wiped out. The creditors take over the company, and then they start to dismember it and chop it into pieces and sell it. So it would be a pretty dark, unpleasant situation if we didn't have Bitcoin.
Well, a lot of people are really worried about Bitcoin right now. A lot of people are actually worried about you and your company. So final thoughts for those out there that are like, what's happening with MicroStrategy if the price keeps dipping?
Stay humble, stack sats.
All right. Thank you so much, Michael, for joining us. We really appreciate it.
Thank you.
Oh, hi, I'm Max Patrick. And this, of course, is Plucky. I got a new job. I'm now Plucky's trainer. We're doing some of these sit-ups here. He wants to get as strong as possible for the fiat money apocalypse.
That's right, Max. We're both heading into the fiat money apocalypse, and I'm stacking sats over Swan Bitcoin.
Oh, that's so smart, Plucky. How did you get so smart? Get the Swan app.
Welcome back. For some Bitcoiners, this is their first bear market. Others have weathered the storms of Bitcoin's volatility before. So for this week's story, we wanted to look at the big picture and provide some context for the latest bear market. Let's dive in.
There's a massive raging bear market going on globally in all asset classes. There is no safe haven.
For long-term investors, bear markets are nothing new.
This is probably the most unusual bear market that any of us have witnessed in a very, very long time.
So what makes this one different? For starters, the Fed has just raised interest rates for the first time since before the pandemic, with total debt at 370% of GDP.
We poured $4.5 trillion in 36 months into this economy from a helicopter, into the hands of consumers and businesses all over the land. That's a lot of cash, and it's still there.
The concern was clearly an asset class bubble that was building on top of just massive liquidity.
We have lots of things kind of aligning and all aligning negatively.
A looming recession and tightening monetary policy has many Bitcoiners wondering what this will mean for the asset. The fact is, as the Bitcoin ecosystem has grown and matured, its price, as measured in US dollars, is increasingly affected by the greater macro environment.
When the market's doing well, then Bitcoin's been up, and when the market's doing poorly, Bitcoin's been down.
There's much debate around if and when we will finally see a decoupling from the broader market. But zooming out, there is clearly something else at play with Bitcoin's price action since inception.
I'm actually a Bitcoin observer, and I'm observing its trajectory as a new technology and comparing it to the trajectories of things like the printing press, or the steam engine, or the railroads, or the automobile, or electricity.
Bitcoin's growth is actually following a classic adoption curve as more and more people come to understand what Bitcoin is and why it's a better form of money.
The majority of market participants still consider Bitcoin to be just another crypto or some kind of small tech stock. Now we live in the digital age, and because of the internet, because of the digital age, we were actually able to create a more perfect form of gold, a more perfect money, and that's called Bitcoin.
What we're seeing is exponential adoption mixed in with regular market cycles, leading to spectacular volatility, mostly to the upside. For those with high conviction and low time preference, hodling through the bear market has paid off.
Bitcoin has gone up on average 170% a year for the last 11 years. It's gone down 3 different times by more than 80%.
For many Bitcoin experts, it wasn't the size of this drawdown that caught them off guard, but the timing of it.
I was around for the prior 2 bear markets. 2013, huge rise. It hit that classic bubble chart. You were mentally prepared. 2017, again, this unreasonable exponential rise. So you were mentally prepared. I wasn't mentally prepared for this one.
Are Bitcoiners feeling more pain in this bear market than they have in the past? Well, the answer may have a lot more to do with human psychology than the price of Bitcoin.
Achieving low volatility is not the objective of investing. It might be a psychological objective for people.
It is kind of hilarious. Human nature is always the same cycle to cycle. You know, people get euphoric on massive upside and they get totally despondent on downside. And what we're seeing right now is brutal.
I think dollar cost averaging was literally made for this type of environment.
It's safe to say the investment thesis for long-term holders hasn't changed. Allocating at least some portion of one's savings to Bitcoin might not be a bad idea, especially at a lower price entry point.
Based on the metrics that I look at, Metcalfe's law, adoption-based models, demand-based models, and on-chain analytics, Bitcoin is really cheap right now.
The average investor should ask himself or herself, what do you have in your portfolio that has this kind of track record?
In the words of Satoshi, it might make sense just to get some in case it catches on.
For those of us who have gone down the rabbit hole and done the research, we view Bitcoin as the world's ultimate safe haven asset. It's literally the greatest risk-off asset that has ever been created. It serves as a store of value 100 times, 1,000 times better than the US dollar. And so we're waiting for the world to understand that.
Welcome back to Hard Money. Joining me now for our weekly macro segment is Andy Edstrom, CFA and author of Why Buy Bitcoin. Hey, Andy.
Hey, Natalie. How are you?
Good, thanks. I want to know, what is the biggest headline for this week when it comes to macro? What are you watching?
Well, certainly I'm watching financial markets and I'm watching stocks. You know, we had a sizable rally early in the week and then we gave it back, or most of it back today. So markets are indicating that we're in a bear overall. I'm talking about across risk assets. So that's a major factor. And then obviously noises out of the Fed. It's all about the Fed. It's all about interest rate policy. And that's what seems to be driving pretty much every asset.
How are they trying to bring down inflation? They're hiking interest rates. They're trying to tighten and taper, but is it really working? Or are things starting to break in the system that could pose, the risk of a liquidity crisis?
Yeah, well, that's the line that they're towing. I think you could argue that it is working to some degree. We're starting to see weaknesses in certain areas of the market. So obviously when stocks are down, you get a negative wealth effect, right? So that hurts consumer confidence. Oh, by the way, the consumer confidence readings are quite weak. So if that's the goal, basically to suppress demand, it seems to be working. We're seeing it in indicators like good old Dr. Copper, right? When the price of copper is underperforming, that's usually a sign that things are slowing in the economy. And we're seeing it in inventories of the retailers. There's so much inventory in the system that we're reading about stores being willing to pay people not to return goods because they don't have room essentially in their warehouses basically to take the return. So yeah, I think we are seeing that demand is starting to be adversely affected by what the Fed is doing, which seems to be what they want. And then the contrast is we still haven't seen things break in financial markets. Credit seems to be operating. So yeah, so far, I guess so good, you would say, if you're at the Fed.
So are we actually in a recession? And, some of the lagging factors are things like unemployment. What are you seeing when it comes to that?
Yeah, I think that the definition of recession is something people get really hung up on. Certainly we saw little or no growth last quarter. So if we had a couple quarters like that, it effectively would feel like a recession. I think there's no question that we're in a slowdown. Whether it is technically a recession and is declared a recession after the fact, we'll just have to wait and see. But I think it's important to admit that, yes, the economy has been slowing and continues to slow.
What can you tell us about bond yields? A lot of Bitcoiners in the space always following those as maybe a leading indicator of what's going to happen in the markets. What's happening with bonds this week?
Yeah, to be honest, I haven't been too focused with bonds or on bonds literally this week. The longer trend obviously is upward in yields. I think we saw a little bit of relief in bonds, that is to say yields falling more recently. But, whether that's a trend reversal is hard to say. I think the Fed wants to have higher yields. They want to depress economic activity. It seems to be working. There'll be ups and downs along the major trend over time, but I'm not putting too much stock in relief in terms of yields falling.
As far as just the demand destruction that they're, trying to create, do you think that inflation is going to come down in the next print?
I do think that we're seeing signs of demand destruction, and such demand destruction should reduce inflation at the margin. I'm not going to make a call on whether the next print is going to be up or down from where we were recently. I do think that we'll see inflation at least slow down as we move into the second half of the year.
And lastly, let's talk a little bit about commodities and gold and silver. What are you seeing?
Yeah, so, it's been one of the big puzzles of the last few years, which is central banks printing so much money. Why hasn't gold caught a stronger bid? I'm a long-term believer in gold. I think that gold's action lately has puzzled some people. They were expecting bigger gains recently. I'm talking about the last couple of years than we've seen. Lately, there hasn't been much action in the price of gold. Some support levels kind of in the 1800s. The bull story would be back on the cards, above 2000. So we're kind of in no man's land on gold. It has sort of held its value and purchasing power more or less for the last couple of years, but the gold bugs are still waiting for action.
Anything else you want to share just about the bigger picture and how the macro factors could be impacting Bitcoin?
Yeah, I think that clearly we've seen that when the tide goes out in terms of central bank policy and liquidity, every asset falls in price. We've seen that with Bitcoin. Bitcoin, the situation has been compounded, obviously, by the amount of leverage that was in the system. And we're seeing these centralized financial entities, basically default on each other and seeing a leverage unraveling there. So Bitcoin is affected both by the macro as well as factors specific to its own market. So as far as Bitcoin is concerned, that's where I'm focused on the macro, as well as what's going on in the digital asset and crypto space overall among some of those insolvent counterparties. And then in terms of the big picture, watching the Fed, watching inflation like a hawk. Some relief in the inflation numbers is really what we need to see, I think, for a bull move in other assets.
But really, what would it take to initiate that money printer? Because, we have to be honest, Bitcoin has largely benefited from a QE environment. What would it take for money printer to go burr?
Well, it might take an election, and we do have one of those coming up in November. So that's still months away. But getting past the election might relieve some of the political pressure that's on the Fed right now. Another thing would be if the credit markets break, right? If you see disorder in the corporate credit market, whether it's in high quality or junk credit, if you saw disorder in the treasury market, some of these things that we saw actually just 2 years ago, a little over 2 years ago, when the COVID crisis hit, if some of those signs start to crop up, then the Fed might back off and decide, okay, despite the fact that our mandate is employment and price levels, we also have this mandate, which is orderly and functioning financial markets. And so, if something honestly breaks in the credit market, that could trigger a reversal. And it's frankly hard to predict when that could happen. It might never happen, or it might happen in a few months, or it might happen next week.
All right. Well, Andy Edstrom, it's always so great to have your insight. Thank you so much. You were watching Hard Money. Don't go away. Thank you so much for watching this week's edition of Hard Money. Our goal is to give you the latest headlines impacting Bitcoin and the global economy while bringing you original interviews straight from the biggest names in the space. I'm Natalie Brunell, and I'll see you next week.